Welcome back to Fundamentals of Accountancy, Business, and Management. For this video, we're going to talk about accounting concepts and principles. Content standards. The learners demonstrate an understanding of accounting concepts and principles. Performance standard. The learners shall be able to identify generally accepted accounting principles. Learning competencies. The learners shall be able to explain the varied accounting concepts and principles, and solve exercises on accounting principles as applied in various cases. Now, the last time we were able to learn that accounting is considered as the language of business in order for business entities to determine the financial performance, accounting is needed. There are different forms of business entities according to its organizations and operations, and we have learned these in the previous videos. A business can be organized as a sole proprietorship, a partnership, or a corporation. And there are also classifications based on the activities that businesses make. A business can be operated as a service business, a merchandising business, and a manufacturing entity. Sometimes we want to determine our performance compared to similar companies. But since there are a lot of ways and assumptions to present financial reports, it is important that you'll be able to identify the different concepts and principles of accounting and identify if a specific situation follows or violates an accounting principle. Now let's take a look at this text. Petness' first pet shop. Juan de la Cruz opened his pet shop business called Petness' First Pet Shop. He opened a bank account for his business and deposited 500,000 pesos. The business earned 50,000 pesos, but he had doubts with the recorded expense of 60,000 pesos. He is not sure if he should include the following items as expenses. Salary expense, 20,000. Rent expense, 10,000. Utilities expense at home, 15,000. Utilities expense at the store, 10,000. Insurance expense, 5,000. Withdrawals is 10,000. So the total of the expenses is 60,000. Now let's look into each of the items and identify if each of them should be included in the expenses. The first one is the salary expense, which amounts to 20,000. This one should be included since it is related to the operations of the business. This salary is given to those people working for your business. The next one is rent expense. In this case, it amounts to 10,000. Rent expense in this case should be included because this rent is for the business. Now, utilities expense at home, which amounts to 15,000, should not be included because it is a personal expense. The next item, utilities expense at the store. I think you already know that it should be included since it is an expense of the business. Now, insurance expense of 5,000 should also be included because this is an expense or insurance for the business. And finally, the withdrawals, which amounts to 10,000, this one should not be included in the expense because withdrawal of the investment is for personal use. Now, this shows an application of the business entity principle, which is one of the most important principles in accounting, and which is also one of the principles that we are going to discuss in this video. Now let's move forward to the accounting concepts and principles. And the first one is business entity principle. It says a business enterprise is separate and distinct from its owner or investor. Just like in the example that we just had, the expense, the utilities expense for the house or in their home should not be included or recorded as an expense for the business because the business enterprise and the owner are separate and distinct from each other. What would be the example? If the owner has a barber shop, the cash of the barber shop should be reported separately from personal cash. Another one, the owner had a business meeting with a prospective client. The expenses that come with that meeting should be part of the company's expenses. If the owner paid for gas for his personal use, it should not be included as part of the company's expense. So, as you can see, if the expense is related to the operation of the business, it may be included. It is included. But if it is for personal use, especially for the owner's use or investor's use, then it should not be included as an expense because of the business entity principle. Next one, we have the going concern principle. It states that business is expected to continue indefinitely. So, what would be the example? When you prepare financial statements, you should assume that the entity will continue indefinitely, that it will continue its operations for on the following year and the year after that. The going concern principle should not confine you or limit you into thinking that the business would end at this time, but instead you should think that it will continue its operations. The next one is monetary unit principle. It states that amounts should be stated into a single monetary unit. For example, your business should report financial statements in pesos even if you have a store in another country, say for example, in the US or in South Korea. And your company should report financial statements in dollars, or probably your branch in a different country should report in the monetary or in the currency that is used in that country. So, even if, mali. Ulit, 3, 2, 1. The next one is the monetary unit principle. It states that amounts are stated into a single monetary unit. So that means that Jollibee should report financial statements in pesos even if they have a store in the United States. And a foreign company should report their financial statements, let's say in dollars, even if they have a branch here in the Philippines. For objectivity principle, financial statements must be presented with supporting evidence. It could be done by using supporting accounting documents. So let's say when a customer paid in your restaurant for their order, you should have a copy of the receipt to represent as evidence. The next principle is the accrual accounting principle. So revenue should be recognized when earned regardless of collection, and expenses should be recognized when incurred regardless of payment. And on the other hand, we have the cash basis principle. In that case, revenue is recorded when collected and expenses should be recorded when paid. Cash basis is not the generally accepted principle today. So when a barber finishes performing his service, he should record it as a revenue or income. And when the barber shop receives an electricity bill, it should record it as an expense, even if the barber shop hasn't paid for that bill yet. Matching principle states that cost should be matched with the revenue generated. When you provide tutorial services to a customer and then there is a transportation incurred related to the tutorial service, it should be recorded as an expense for that period. So cost is matched with the revenue generated. Next is disclosure principle. All relevant and material information should be recorded. It is very important that we report all the relevant information. Next is the conservatism principle, also known as prudence. Prudence, Prudence. It says, in case of doubt, Assets and income should not be overstated, while liabilities and expenses should not be understated. So if you're in doubt, expenses should be recorded at a higher amount and revenue should be recorded at a lower amount. For example, the receipt, you cannot clearly see in the receipt whether the cost is 10 pesos or 16 pesos. If you're going to use the conservatism principle and that is an expense, you should record it at 16 pesos. Now, if it is a revenue, let's say you have to consider whether the amount is really 1,100 or 1,000. Since that is a revenue, you should record it at the lower amount, which is 1,000. Okay? Only in case of that. But of course, based on the objectivity principle, we have to try our best to base our recordings on supporting accounting documents. Another principle is the materiality principle. In case of assets that are immaterial to make a difference in the financial statements, the company should record it as an expense.